It's BlackRock's Bold Call. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, BlackRock's market prediction will blow your mind because it goes completely against all consensus right now. And we're going to show you why we think BlackRock is going to be right. And that's why we like to look at the technicals, momentum, and machine positioning every Sunday to help you be a better trader and be positioned correctly in the markets. Plus, we have a sponsor for today's show. You might remember Imix Biopharma. They've been on our show a number of times, and you can find them on the NASDAQ under the symbol IMMX. And Zacks, the rating agency, has issued a top buy rating on this stock and has recently, as of days ago, reaffirmed it. We're going to show you why they're so bullish on Imix and why we think their stock could go up as much as 56%. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's over to Bloomberg to find out why, of course, we see BlackRock going against the consensus in a big way. And here we can see Wall Street enjoys a YOLO moment because you only live once after the Goldilocks jobs report, which sent stocks higher because bad news is now suddenly becoming good news. The case is, what is going to be driving the market? Because I want you to be thinking right now, the consensus is that rates must go higher and that stocks must go lower. And let's take a look at what BlackRock is predicting. The narrative is changing and the facts are driving that. This according to BlackRock's Jeff Rosenberg, as he said today on Surveillance. But it's not completely about Wall Street turning a blind eye to potential weakness, but rather what's already being priced into riskier assets so far this year. And as Rosenberg put it, how do you rally in front of a slowing labor picture? Well, it's a matter of where we are. Equity markets were weaker while the economy was strengthening. So here we have the case that BlackRock is saying, look, wait a minute. The economy is getting better here, not worse. We're not at the point of recession yet the market's pricing it in. And now we're going to give you the case of why we're going to see the last 2 months of the year blow investors' minds out of the water because the setup is completely bullish here. Going to give you the two catalysts. Now let's head over to Goldman where we continue today's story with a tactical flow of funds report. Now there are less than 40 trading days left in the year. And of course, we see Goldman saying, hey, we're getting the biggest pushback on their note, saying that pain trade is to the upside for year end. We're going to make the case why we agree with not only Goldman, but BlackRock here. Now, what does the consensus say? I'm short stocks and bonds, meaning people think stocks go down, interest rates go up. The 60-40 portfolio looking for a December 2018, a bad Santa, FCI tightener led risk-off correction. Everybody is bearish. And what does the consensus say about the consensus? Well, how much can we rally if we start going? The answer is that we're going to show you a lot and a whole bunch. Let's make the case. Let's talk about, the machine positioning here. Let's talk about corporate share buybacks. These are the two biggest drivers of the market, and they're both going to come online in a big way at the same time. Of course, we've made the case. Corporate share buyback window is reopening. They're hitting about 70% now of U.S. corporates are back in their window to buy. That's going to run through early December. And here we can see buyback authorization announcements are now at their third highest level on history. And my friends, you have to understand, they've got to get this done before the end of the year. They've got a lot of buying and less than 40 days to do it. And that means the machines, which we've talked about, being short this market, are about to take a major reversal and turn into buyers. And here we can see the CTA supply global equities. Now, almost behind us for this last week, we can see in a flat tape there were sellers, but just a bullish move of the market as corporates are coming back online. Investors are celebrating. The Fed going into pause mode, in fact, maybe cutting. But look at this till over the next month. The upside convexity just from the machines alone, $24 billion to sell, that's not a big deal. But if we see an uptape, and we already are, that's $242 billion to buy. And now we're talking a period a little over 3 weeks with $71 billion in the S&P. You want to see a catalyst that sends the market higher. You've got machines buying and you've got corporates buying. Everybody is racing to the end of the year. Meanwhile, your retail investors short the market and short bonds, and that's not the case at all. Let's take a look at the systematic positioning here. Again, going back to Goldman, You'll note the positioning in U.S. equities, the CTAs, risk parity, and vol control funds are all pointing to the downside. S&P 500 now reversing to the upside. We're going to show you where those trigger points are, and that means the machines have to now play chase, just as they do, to the upside. And here we can see global, or not global, this is U.S. equity position broadly just from CTAs is at short position, not seen back since late 2018. So these machines got to chase in a big way to the upside. And here, let's take a look at TD Securities. They're at 43.60 to buy, under 4,300 to sell, and that means you're going to see a boost from their machines here kind of early on next week, and likely coming Monday or Tuesday, just depending on where the market goes, and you're going to see them trigger and more trigger. And now let's take a look at our own screens, because we've got this one. Now, this is one trade. Now, if we go back and we talk about one trade I wanted to keep, this was one of them. We put the stop loss pretty low. You might remember it. We got stopped out. Not a problem. We're back in the game, as you're about to see, because the catalyst here to year end is all to the upside. Now let's take a look, because the S&P 500 momentum is currently positive, as the RSI is at 58. Remember, we want to see the relative strength indicator at 40 and rising. This direction is headed. MACD's got a positive cross. That's your moving average, convergence, divergence. Those are your two technical indicators. Plus, we have our own Momentum Timer Pro. This is the one on the bottom. Now, we aggregate a bunch of technical signals, smooth them out, so you don't have to worry about all that. It's got 2 consecutive daily buy signals on our count. That gave us one of the 2 signals we needed to get back in on this position. The other is our machine positioning. Now, just days ago, this was at max short, minus 100% on the fast algorithm, minus 100% on the short, and there was a pair signal. We told our subscribers, when you see a reversal here on the machine positioning and you get a matching signal on Momentum Timer Pro, that occurred on Friday, November 3rd. So you're not too late, and even better, you can still be a subscriber. I opened up a few more of those free subscriptions for a month, so you sign up, you get a month free, you can use the report. In fact, I got an email from a subscriber today saying, Steve, this thing has paid for itself over and over again. He says, I love it. Thank you so much. Well, you can join in too. And so you can follow the trade along, and you can see we have a buy it open on November 3rd at 433.14. Stop loss now down at 416. We think nothing but upside here. The initial target 448.47. Downside sitting at the 200-day moving average. Now let's take a look at the charts and look at the setup here, because this is beautiful. You remember, we talk about support and resistance and supply zones. Now you see here, these 2 purple lines right across the middle of your screen. This is what you call resistance. Price gets in there, sellers show up. Price gets in there, sellers show up. That is resistance. Think of it like an army advancing, and they get pushed back. And all of a sudden, the army makes a big move. They break through the line, and guess what? The defenders back up here to form resistance again. And one of the most bullish signals that you can get is the defenders push back all the way to their prior line, and the offense comes in and says, hey, you know what? We got this. So now we have a buy it open here on Friday. We think the catalyst here, 448 into that supply zone, a break above that. And now if you're talking, all of a sudden, a chance at running to maybe the all-time highs, potentially even setting a new all-time high on the S&P 500. Again, you start thinking about the broad positioning here. Everybody is bearish, and yet the 2 biggest bullish factors, corporate share buybacks, and of course, machines coming in a big way. Let's take a look at the tech stocks here and see what we've got going on with QQQ. Because momentum remains positive on this. RSI is at 58. MACD's got a positive cross. Momentum Time Pro, 2 consecutive daily buy signals. Now, one nice thing, we didn't get stopped out of this trade. We held this on October 9th. I was trying to say November there, but that's October. That's 10-9. Buy it open, 362.30. We're now back in the black. Some of you said, Steve, you missed that trade, man. It went down. I said, hold on. Wait, the seasonals to the end of the year. Very bullish. Stop loss level at 352. Upside target, we tagged it at the 100-day moving average. Now moving that higher to 378 or 379. Downside target holds at the 200-day moving average. Again, links to Momentum Timer Pro and CTA Timer Pro, because one thing I want you to know, you saw that on the S&P. Our signals beat what those actual you see from TD Securities, from Goldman, and from, we got stuff on Nomura. You see it, we predict it before it happens, and you can be on that list too. Again, jump on one of those free coupons for a month before they're gone. They go quick, and I don't refresh them every day, so you got to get them while they're hot. Now let's take a look at QQQ here. and see what the chart setup says. And looking at tech stocks, what do we have? Momentum building on the RSI, on the MACD. Both things we want to see here. So we have a nice bullish setup. How about this? We got a beautiful flagpole rising here. And what is this? If you're a technical trader, you know what this is already. This is called a bearish flag. And wait till we get to IMIX. We're going to show you they've got a bearish flag too. And that means if this start breaking through these short positions, watch this grow up in a big way. Let's zoom out to the 5-year chart. We think easy run at the all-time highs here. Of course, we're not going to be too greedy with our initial calls. We've got our initial call at 378, so just above here for the next week. But you start to see some breakouts over these short positions, and watch tech stocks rally into the end of the year. Investors across the board are going to be playing chase with this in a big way. And all they can be playing chase with the equity market, they're also short the bond market. Let's take a look at this, because CTAs are short 293 billion worth of global bonds. This is massive, and now we're seeing buying demand. We're just coming out of that 1 week window. Look at this over the next month. It's called a green sweep for a reason. They're buyers in every case. How about this? Flat tape, 63 billion. You say that's nothing. How about this? An up tape over the next 3 weeks or so, 425 billion to buy. You want to see a catalyst that drives yields down, bond prices up. In a down tape, even 96 billion to buy. They are big buyers across the board. Let's take a look at TD Securities here. And what do we see on the 10-year? Just over 108.69 to buy. That means likely triggering Monday or Tuesday, possibly at the latest. How about we head over to Nomura? They're playing chase a little behind. You see all this red? That means they're short across everything. They're max short, and they're about to trigger. They're going to follow TD Securities, and they're going to be buyers. Everyone's going to be buying bonds, except all the people who are short, and then they're going to be buying after it's too late. Let's take a look at TLT. Momentum is positive. Now remember, we were tracking this trade. We're upside down in it. We didn't throw a stop loss on it. We didn't tell you to use it. So now we're showing you a recovery trade. But if you aren't doing a recovery trade, and many of you aren't, this is a still impressive opportunity. So you see we've got the S&P set up to go higher. NASDAQ set up to go higher. And now are you getting the picture here? All the signals going higher. And so if you're not on the bond market, this is a big signal too. Let's take a look at what's going on here. RSI is at 54 and rising, as is the MACD. It's got a nice positive cross. Momentum time growth, 3 consecutive daily buy signals, and TLT came off of that max short position. Again, we suggest all of our subscribers twice a week, we put out a hot list saying these are the ones to put on your report and watch for a reversal. And sure enough, on November 2nd, at 86.68, we got that trigger at buy at open. We added that to our trade. We now have 3 trades in that position. Cost basis at 96.18. Friday's closing at 87.63. Starting to get the catalyst here. We're going to come out of this trade a winner with all that machine buying. I hope you're seeing that. That's again the power of our 2 reports. Next upside target 92.80. Downside target 21-day moving average. Let's head over and take a look at the chart. At TLT, we're looking at 92.80 to the upside. We got to zoom in here a little bit. We don't need to see a 2-year chart. We need to see 92.80 is trading right around this gap. We want to get and close this gap here. That's a nice trade. Puts us near back in the black of where we want to be. And these machines come in and buy. You're going to see all those people that are massively short get clobbered and turn into buyers and close out their short positions. We think it's a big tailwind for bonds, driving them up potentially into the $99, $100 range by the end of the year, maybe even sooner, as people, again, massively short the bond market and are going to be playing chase. Now, how about gold? We made the case. You might remember that, of course, there was a massive triple top. And some of you said, Steve, this is bearish. And well, no, historically, it is not bearish. But yet, many of you responded and bought and are driving gold higher. And we picked that trade up as well. We showed you on our reports. Let's follow up on that in a big way, because the machines now are going to be buyers. And again, every instance driving gold prices up. And here we can see with TD Securities, they are buyers above 2,000 an ounce. Again, you're looking at triggering on Monday, and then Tuesday, they're going to be triggering all over the board. And we've got this trade on the books. We had this one back on October 12th. We had to buy it open. But again, showing you how to use the reports, so how easy it is to do. We're only behind on one of our recent ones on the S&P 500. That was a short-term one we got stopped out on, unfortunately. But look at this. RSI is at 66. It's cooling off a little bit. But remember, momentum is strong here. MACD is positive. You have 18 days of consecutive daily buy signals. What is the key factor here that I want you to get the picture of? The machines are playing chase to the upside. We got you in this trade well before that. Look at this, buy it open 174.06. We got your stop loss level right below that. At 179.61, I said below, I meant above that. That one will lock that one in if price goes down. Friday's closing 184. We're in the black on this trade. That's where we like to be. Upside target a little higher, 188 before we make a run at the recent all-time highs. Downside target, 200-day moving average. Look at our machine positioning. We were telling you to be long before. Same with our technical analysis report. We told you, be long this before everyone else. That's how you use the reports. Let's take a look at GLD here. Our target is going to be 188. That's right up here near those two tops. You get there. I think you got another run at, of course, those triple tops. Maybe we get a quad top. Maybe we get all the way up to 194. There is a certain potential here that we could see that based on all of the machine trading that's coming. The big opportunity in GLD. Not too late if you missed it, but one thing you can avoid missing is by being a subscriber. Again, links in the description below. Now, one trade we got stopped out of that we wish we didn't. This was the other one. I'd rather take the S&P here. RSI is 58 on GDX. Momentum's positive, but we got stopped out at 28.22. No gain on that one. We bought at 28.22, stopped at 28.22. Friday's closing above that. Here's the deal. We have no position, but add on the next move on the CTA fast. Those are subscribers. You see this jump to the next level. We've got momentum behind it on Momentum Time Pro. We'll add a position. We'll update this. And we see upside target is the 200-day moving average. Now, I'm not looking for a big return out of this one. If you're thinking this is going to be huge, I think the price target, based on this inverse head and shoulders, here you go, left shoulder, head, right shoulder. You do a little bit of measuring. You got about a $3.5 play. It takes you up here, somewhere around the $33, $34 range. You know, not a big move. I mean, it's a decent move. Don't get me wrong. If you're trading in, that's a potential 10% move. If you're trading the miners in history, it's not the hugest move. There's some risk there, but we'll look to get back in on that trade here in the near future. How about the dollar? We told you how to play it to the reverse. How about this? Momentum's negative. RSI is at 44. MACD, negative cross. We now have one consecutive daily sell signal, but no position on UUP, but on UDN, we're going to put a buy it open on November 6th. That's Monday. Buy it open. We think the dollar heads lower here now. Friday's closing 26.61. What's the catalyst? Remember, this was 100% long across the board. We said when this come down and you get a confirming -1 on the daily count of Momentum Time Pro. So here we got it on Friday. This is the Monday report we're looking at, and now we've got, you want to take UDN to the long side here. There's your trade, how to use it to the opposite. And now our last one to look at before we talk about MX and why we think they've got a huge setup. Of course, all the machine buying is going to be a massive catalyst for them as well. How about this? One of our other recovery trades on platinum, and many of you in the comments, you said, Steve, you are never getting out of this trade. You got this one completely wrong. We're going to show you, look, my friends, the reports to show you how to do this. And we've got now 4 trades on this. Our cost basis is $86.35. Friday's closing at $85.90. So we're almost back into black. We're almost there. Upside target 200-day moving average. And look at this. Our machine positioning super long on this. The big case here, why we think this is going to go higher? Well, how about this? I just showed you the dollar is likely from a technical position. You tack on everyone thinking the Fed's going to cut. That means dollar bearish. You see platinum go higher. We're going to break out over here. Beautiful bottoming pattern. When this thing takes off, we're looking at potentially somewhere in the 97 to 102 range. From here, that would put us nicely in the black and make that recovery trade totally worth everything, as you're about to see. I think that's going to happen. Now, let's talk about our sponsor for today's show. You might remember MX Biopharma. They've got some big news. They've got a big buy rating from Zacks, their rating agency. We're going to show you the chart setup. We're going to show you why they think the stock goes up. We're going to show you how high we think it's going to go. Now, you can check out the pinned comment or description, find out all the information on MX. Let's take a look here, because we see from Zacks, it's a great buy the bottom stock right now. We completely agree with that. The price trend, they say, has been bearish, but with the formation of a hammer pattern is a technical indication of nearing a bottom with potential exhaustion of selling pressure. Rising optimism on Wall Street analysts about the future earnings of this company is a solid fundamental factor that enhances the prospects of a trend reversal for the stock. We're going to show you, again, they're showing us in the micro, we're going to show you the macro case for this, but let's take a little deeper look at why Zacks is so bullish and why, if Zacks is bullish, the stock tends to go up a whole bunch. And what increases the odds of a turnaround is the consensus earnings per share estimate for the current year has increased 6.9% over the last 30 days. And this means that Wall Street analysts covering IMEX are majorly in agreement about the company's potential to report better earnings than what they were predicted earlier. But if this isn't enough, you should know that IMEX currently has a Zacks ranked number 2 on the buy side, which means it's in the top 20% of more than 4,000 stocks that we bring based on trends in earnings and estimate revisions and EPS surprises. And get this, stocks carrying Zacks rank 1 or 2 usually outperform the market. You can see that complete list, of course, through the Zacks website. And moreover, a Zacks rank of 2 for IMEX is a more conclusive indication of a potential trend reversal, as a Zacks rank is proven to be an excellent timing indicator that helps investors identify precisely when a company's prospects are beginning to improve. And now let's take a look at our case of why we think the stock could go up as much as 56%. Now, we talked about this bullish flag pattern. I want to show you the flagpole. There's this part we're going to focus on for IMEX, and then we're going to look for the breakout on their stock. So let's take a look at their long run chart here, and what do we see? A lot of buying coming in here. You'll notice we're looking at a 2-year chart. So almost over the last 2 years, accumulation. Big insiders, big buyers, Wall Street, you name it, people have been buying this stock. And notably, you see resistance where the sellers have been. We've been talking about the stock. We've featured it many times on the show. We've had the bullish case. It broke out, which many of you jumped on, came back, held this resistance level, which is now support, and we're seeing this bullish flag here. That's the catalyst to take the stock up 56%. This is exactly what you want to see from a technical trade. Now let's zoom in here. We've got the 90-day chart, and what do you see? There's the flagpole, there's the flag, and a breakout over above these shorts. You sense IMEX stock, we likely seeing up again 56%. You can find them on the NASDAQ under IMMX. You look at the RSI, the MACD, all getting ready to move higher here. Let's zoom in to the 30-day chart, and you can see that bullish flag very clear, starting to break out. It's got to get over this $3.80 level where the last of the big sellers were at, and then from there, catalyst, nothing but higher on IMEX. And of course, with any company that we feature on our show, you're under no obligation to purchase their stock. You should do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.